Is this a coincidence? When we look at all blockchains, we look at all applications, we check how much capital is in all of those different decentralized finance protocols, we seem to have topped at the exact same level as we did in 2022. 2021 was a DeFi summer. A lot of experimental projects got launched, some of them more successful than others, but then came the Terra Luna crash. One of the largest decentralized finance protocols collapsed, and that brought the entire market down with it. Now, something changed in October of 2023. Suddenly, money was flowing into the market again. So what you see over here, that's the stablecoin market cap. This is going up whenever somebody is depositing fiat currency into the crypto ecosystem. So let's say you send some money to Binance. Binance will then send this over to a stablecoin custodian. The stablecoin custodian will hold the funds, potentially make some money with bonds, and at the same time mint the stablecoins on the chain. So that's what we see here on this chart. Whenever new stablecoins get minted, when new money is deposited into crypto, this is going up. And it's going down when people withdraw from crypto. In May 2022 was the Terra Luna collapse, which then led to a 1-year-long bear market. But October 2023 is where things turned around. It was also the time when decentralized finance applications got used again. But interestingly enough, even though we've got way more stable coins now floating, decentralized finance applications haven't grown to the same degree. They've seen a strong retracement. And is this just the beginning of a further correction that leads us down to a more severe bear market? That's what we're trying to answer in this video. The nature of this bull run, when we went from 16K all the way up to 125K, is very different to what we have seen in 2021. Have a look at the Bitcoin price in orange and the open interest in blue. Now, open interest is the amount of bets that are made on crypto via levered instruments like perpetual futures. The open interest has grown much more compared to the Bitcoin price. So now we've got much more inherent leverage in the system. If the price is going down, then this can lead to cascaded liquidation events. We've already seen a bit of a preview of how dangerous this can be. Have a look at the altcoin market. This is the 10th of October. On that day, within 1 hour, the entire altcoin market lost on average 47%. Some altcoins went down by 70, 80, 90%. Others went down only by 30%. This was very much dependent on how many people were already betting on that altcoin. Many market makers bought for those depressed prices, brought at least a partial recovery, but now the market makers that bought at those levels are over time offloading their positions again. And so there's always a problem with this inherent leverage. When the market is levered, it's more sensitive to price swings. As in, if we go below a certain threshold, people are forced to sell further. And the price goes down even more, then even more people are forced to sell. So the more leverage we have in an asset, the more risky it is. And that risk is hidden. It's hidden from the daily price discovery. Some assets are more risky than others. This is the open interest just for Bitcoin. And while the Bitcoin price grew less quickly than the open interest, the difference in growth is still somewhat manageable for something like Bitcoin. But have a look at Solana during the same time period. Solana's open interest grew much more, relatively speaking. Solana is much more levered now than it used to be 4 years ago. So we can make the argument that the current Solana prices and the tops we have seen were not natural tops. They were simply just creations made from leverage. Some people taking on very heavy bets. If we are actually entering a bear market from here, if the long-term holders of Bitcoin continue to sell, and that selling pressure will then also roll over to other altcoins, Solana is very likely going to be affected more than the average altcoin. At least it's going to be affected more than Bitcoin. This is Solana relative to BTC. What we see here at the bottom, that's the Bitcoin price. When we are in a bear market and Bitcoin loses more than 70%, Solana tends to lose even more. Solana relative to Bitcoin during that bear market lost another more than 80%. And that's just in 2022. That's just when the general DeFi market went down. By the way, if this is not your very first time watching this channel, then feel free to subscribe over here. I publish videos regularly, and when you're subscribed, YouTube is more likely to recommend the videos of this channel again. This time it could be even worse, because this time we've got much more leverage in the ecosystem. We've got all of that open interest, all of that speculative capital, all of those gamblers that are hoping for the number to go up. During DeFi summer, Solana's open interest was somewhere around 1 billion. That moved to 17 billion, a 17x. The Solana price has pretty much not changed from one peak to the next. And so I think this is a very important concept. If you just buy and hold, if you're not trading that actively, and you count Solana as one of the safer cryptocurrencies, it's still important to have somewhat of a hedging plan. It's important to figure out how to manage risk, because volatility for Solana can be much, much higher than for Bitcoin. It has been higher in the past. It might be even higher in the future. From the top of DeFi summer to the absolute depression a bit over 1 year after the peak, we had Solana drop by 96%. You put in the money to buy a Ferrari, you get back the money to buy a bike. I don't think it's very wise to get exposed to that kind of volatility long term. I think it's much better to find approaches to time the market, even though those approaches might not be perfect, even though we might lose on some gains. But really, realistically, we cannot buy into something that can drop that much. This is not an asset to hold very long term. It's an asset where it makes sense to figure out when things are heated and when things are rather depressed. A lot of the numbers on Solana are very questionable. For example, we've got trading volume in the last 24 hours of 3.15 billion. But the vast majority of that comes from pump.swap. 2.1 billion. Most of that trading volume is just wash trading. Most of that trading volume is not organic. It's so bad that the token of pump.fund performed even worse compared to Solana. So even though we've got the buyback program, even though we've got all of that development, nobody wants to buy the pump token. So at some point, even that trading volume might go close to zero. And then it becomes obvious that Solana should be valued at lower levels. Imagine the 2 billion go away from that trading volume. We are only at 1 billion. And compare that then with something like Ethereum, which has 31 billion of trading volume, despite having higher gas fees, despite having much higher costs for transacting. Here is my base case. I believe it's very likely that the market will continue to concentrate towards Bitcoin, at least until we are again in a clear bull market, until we have hit new all-time highs, until we potentially even accelerate in the growth. But we are very far away from that right now. This is Bitcoin dominance. It tended to peak at around 73% in the past. And whenever it crashes, that means we've got altcoin season. Bitcoin dominance is rising already for the last 3 years. And what we see here at the bottom, that's the cryptocurrency market cap, except the stable coins. When do we see an altcoin season? We tend to see it after a massive rally in Bitcoin, when people are wondering what's potentially the next Bitcoin. Bitcoin has already run that much. Maybe we should now get into more risk on assets. And that works for a brief period of time. It worked at the end of 2017, just before the market was so hot that it cooled down when Bitcoin went from 20k to 3.5k. It also worked when Bitcoin went from 3.5k up to 60k. Still, the market itself expanded, but it was mainly the altcoins that subsequently rallied once Bitcoin was at 40 to 50k. So whenever crypto prices tend to go down, this tends to be good for Bitcoin dominance. Bitcoin tends to perform better when people get risk off. And Bitcoin even tends to continue for the first part when we recover from the bear market. And that does make sense, right? It's okay to dollar cost average into Bitcoin. It's okay to just buy and hold Bitcoin. Bitcoin doesn't drop by 96% like Solana does. Bitcoin drops by 80, potentially 70% now. And when it has already gone down by 60, 70%, it's better to just continue going with the leader, because it's very hard to pick winners if we are not yet in a clear altcoin season. Bitcoin has the best risk to reward most of the time. It might not be the best bet and the Bitcoin dominance is already very high and when the market is very heated. But outside of that scenario, Bitcoin tends to outperform the vast majority of the crypto market. No matter if we see a bounce again or if we enter a bear market, so many people got hurt with the altcoins that it's a very tough sell to now get into things like Coq.ino or Pepe Coin or Pal AI. On top of that, Bitcoin has the big advantage that it has most demand through Wall Street. That's true for the ETFs, right? This is the number of Bitcoin that's held by the ETFs. That's also true for the Bitcoin treasury companies. Yes, we do have both an ETF and treasury companies for Ethereum as well, but there the balances don't grow as constantly and as quickly compared to BTC. So Bitcoin is still the king. It's going to be the best performer in case we crash down. It's probably also going to be the best performer even if we continue with the expansion of the market for a bit longer. The last 2 months haven't been too great, right? The stablecoin market cap grew by only 1% roughly, while usually during the span of 2 months during expansionary period, the stablecoin market cap tends to grow by rather 8%. Now there is a reason why the altcoins are performing so poorly, so consistently. It's not like everybody is taking profit. It's rather people like this, venture capitalists that invested in various crypto projects very early on. They got a lot of token allocation. That token allocation might unlock over time. And whenever tokens unlock, the VCs, the venture capitalists, they simply sell. It's a massive problem for the altcoin market. Every week, we see hundreds of millions of new tokens from existing projects hitting the market. It's currently at around 600 to 700 million. Some weeks, it rises above 1 billion. And the fundamental problem really is that there's not enough buyers for all of those new tokens. We can see this not just here on the macro, we can also see this in the micro. Here are a few examples. This is WorldCoin. WorldCoin is supported by Sam Altman, and there are token allocations for investors, token allocations for the development team. The number of tokens is going up constantly. And so WorldCoin relative to Bitcoin after the initial hype is just constantly going down. It's not a coincidence that WorldCoin crashed by 97%. But check this out. This is ZK Zinc. Also has an increasing token supply. Again, investors are getting their tokens unlocked. So does the team. And here's ZK Zinc's price relative to Bitcoin's. It has fallen from the top by more than 90%. We can go on and on. Here is Starknet with a lot of entities getting new tokens. Here is Starknet relative to Bitcoin. Here is Eigenlayer. Here is the Eigenprice relative to Bitcoin. And what we are looking at here is relative performance. So it's not just that the market in general is going down and Bitcoin has fallen by 30 or 40% and that also pushes down the altcoins. No, it's the altcoins performing much, much worse compared to Bitcoin. So when this relative valuation is going down and Bitcoin has fallen already by 30%, the altcoin has fallen by more than 30%. Again, this here is no coincidence. It's the insiders that are dumping on the average retail investor that doesn't really know what's going on. Now here's what I do in order to benefit from all of this. Let's go again to the Eigenlayer price development. Just as an example, right here we still have a lot of token inflation coming. So very likely this price will continue to fall further. So what I'm going to describe is very likely going to be a profitable trade in the next months. Instead of trying to buy the Eigen token, we can do the exact opposite. We can bet on the underperformance of the Eigen token. So we're just flipping this chart. Then it looks like this. Now what we see here in orange, that's the Bitcoin price over the time. So this kind of strategy does outperform just buying and holding Bitcoin by a lot. And again, it's not just random. It's not a coincidence. This is structural. It's because of the venture capitalists dumping on everybody all the time. And so we simply take advantage of that. Whenever a venture capitalist is selling their vested tokens, we are making money. This trade, for example, made roughly 1,300% in the last 12 months. So what do we need to do? We need to bet on rising prices of Bitcoin and falling prices of Eigen at the same time. So we're opening 2 positions, long BTC, short Eigen. And the reason why we want to open both of those positions is that we still have all of that correlation within crypto, right? So if Bitcoin was to suddenly rally by 20, 30, 40%, the Eigen price is likely also going to go up. It's simply just going to go up less. So when Bitcoin goes up 40%, then Eigen might go up by 20%. It still has the selling pressure by the team and by the venture capitalists that will, relatively speaking, depress the price. But the US dollar price itself might still go up when everything is going up. That's why we want to make the delta trade here. We go long Bitcoin, we go short Eigen. We don't just go short Eigen in itself. I'm following this kind of strategy already for 4 years. In the early days with borrowing and lending platforms, recently more with perpetual futures trades. But what we see over here, that's my alpha, my outperformance, my monthly outperformance versus Bitcoin in a given month. So some months I might still make losses because again, even that trade doesn't always go up. So if you shorted Eigen over here, you might have to wait for half a year to actually get in profit. So there are some negative months, but it's about the general trend. The dotted line here, that's my 12-month average. If we average out all of those dots, we come to a monthly outperformance versus just buying and holding Bitcoin of 1.9%. So on average, after fees, I make 1.9% more return than the average Bitcoin hodler. And that's with very conservative risk management. Here's my portfolio. This is not just trading. This is also dollar cost averaging into the trading account. And then I wanted to prove this directly in the market, not just showing here my results, but actually trading for the community as well. So in July of 2025, I opened up a community pool. The premium members, the annual premium members of Bitcoin Strategy, they were able to deposit into that pool. The capital pool had several $1 million under management. And while Bitcoin, during the time period, so we closed the pool just a few days ago, lost 24.9%, we made 17.3%. So over the last 5 months, we made more than just 1.9% alpha per month. And again, this is not just random, right? This is just working with the market structure, working with all of those cash outs that happen in the altcoin market all the time. Here are a few more details around that first copy trading pool. The average depositor in premium put in 17K. In the end, there was 20K in balance, so 2.7K in profit, 13.4% of average return. Now, why is this lower compared to what's shown over here in the chart? It's because most people did not deposit from day one. Many people waited to first see some positive performance and then afterwards deposited. That's why the performance from day one to the closure of the vault is 17.3, but the average member only made 13.4%. Then there is the 10% fee, so that comes from the platform. We use the hyper-liquid decentralized finance application. Still, when we annualize all of that, because this only ran for 5 months, this is 40.81% of return. Independent of the general market, right? We made money when Bitcoin went sideways. We made money when Bitcoin went down. We do this independent of where the general market is going. And again, the reason why this works is because we bet on rising prices of one asset and falling prices of the other asset. So when the general market is going up, then one of our positions goes up, the other position goes down. So this cancels out all the time. So the general market doesn't have any impact on this portfolio. The only thing that has an impact on the portfolio is how the altcoins do, relatively speaking, to our hedge. Now, there is a new copy trading pool starting in January of 2026. So if you want to be part of that pool, there's a dedicated video and premium that also explains everything in detail. How to deposit over there, how much capital should be deposited, what are the risks, what are the fees, etc. If you want to get access to that particular video, you can also message me directly. I will then send this to you. So this is all part of the premium membership. If you just want to manually copy trade what I do, I announce this to every member, so you can simply sign up for the monthly membership. If you want to be part of the copy trading vault, then you have to subscribe for the annual membership. You do save $250 per year subscribing annually, and you will get access to the automated copy trading as well. Every trade that I make will automatically be mirrored. And while I cannot promise that we will reach again 40% annualized return, I will work very hard to make this project a success again. If it's your first time here, feel free to subscribe. I publish videos regularly. A like would be very much appreciated as well. It helps the channel grow. See you next time on YouTube or see you in Premium. Cheers.